My name is Peter Okomo, Senior Licensing and Compliance Officer, working with the Insurance Regulatory Authority. Microinsurance, it's a product designed to target low-valued assets, or I should say it's a low-valued insurance targeting lower premiums. So if someone has a low-valued assets which they can't insure under the normal or traditional insurance, the direction they should take is microinsurance. There are so many products out there which are micro in nature. The products which here we are talking about products which do not exceed sum insured of 10 million. If you have anything which, like say the value of your asset is 10 million and below, then you fall under the category of microinsurance. Even health, if you are to be covered for less than 10 million as inpatient and outpatient, then you fall under microinsurance. Now here we are targeting very little premium from the public. We know people have been fearing insurance and thinking it is for the rich people, because we had what you call minimum premium. Those days, the traditional insurance, we don't cover anything. They don't cover risks which generate premium which is below 100,000. So here, very many people were left out, or very many assets were left out. So the authority had to encourage the public to come up with products, encourage the players, not the public, to come up with products which caters for the low, should I say low valued assets. I don't want to say low income, because even you who's working somewhere, you may have your asset which is low value and you love it so much, but currently you may not be able to find a solution for it those days. But fortunately, with the introduction of microinsurance, the concerns have been addressed. Yes, I know many Ugandans have a challenge of trust. They have trust issues. Very many people think insurance is for the rich. Two, they think insurance people do not pay. In fact, in some areas when we go out there for outreaches, people tell you, those people are thieves. Those people, they are thieves. So the thing is, insurance people are not thieves. Now, there are certain principles which insurance works on. Now, it follows certain principles, as I've said. So, first of all, insurance, it is not like gambling, whereby you go pay your money and you expect to get something there. Insurance, when you buy it, you are buying peace of mind. You see, when you have your insurance, you sleep comfortably knowing that even if something happens to you, the insurance company will take care of you. Now, most people, when nothing, say they don't claim, they think now insurance company has eaten their money and they have not benefited. But you enjoyed the peace of mind. Imagine sleeping knowing that even if they steal your asset or fire guards your shop or something happens to your property, insurance company will put you back to the position you are in. That makes the difference between you who has insurance and someone who does not have insurance. The person who has no insurance, they sleep while putting their ears to the door, at the door, waiting, thinking, what is happening next? They hear someone walking in the compound, they awake, thinking that someone's going to steal their properties. But if you have insurance, you sleep, even if you hear people moving, you know insurance is there to back you up. So that peace of mind, it's what we are buying. So I want to urge you out there, if you bought insurance, you bought peace of mind. I just wanted to make you understand that insurance is the peace of mind, what we are purchasing. So if you don't claim, it so happens that you do not claim, or the risk does not occur, and the period ends without anything happening, it's not that your money has gone for free. You've bought, you've enjoyed peace of mind. Unlike your colleague or your relative who did not buy insurance, who lived throughout the year being worried. So I just thought I should make that clear. So the trust issue is there, but I want to tell the public that insurance companies pay. Like now, if I'm to put this to perspective, in 2021, insurance industry collected premium worth 1.1 trillion. worth of premium. But at the end of the year, the insurance companies paid claims worth 622 billions. What that means is that they paid out more than 50% of what they collected as premium. Meaning, if you, John, you bought a policy, John bought a policy, James bought a policy. If you, John, did not claim, Paul claimed and Paul was compensated. So tomorrow, if you also suffer from a claim or from the risk which you insured against, they will compensate you. So at this time around, John may not claim. So in a way, we are pulling the risk together and managing it on your behalf. So yes, I want to re-emphasize the point that insurance companies now look for all the possible reasons to pay. Because if you've seen, they have paid, last year they paid more than half of what they collected. And the trend is increasing. Because in 2020, with COVID, the industry collected 1 billion of premiums, and they paid 444 billions. Now in 2021, they collected 1.1 trillion, and they paid 622 worth of claims, which means the trend is increasing, the trend is moving positively upwards. That also implies that the public is getting aware of the insurance and they're appreciating it, and if the risk occurs which the insured against occurs, they know the steps to follow in order for them to be compensated.